The yen, yuan, and Yellen. What are the three whys telling the market? Hi, everyone, and welcome to Ainslie Insights, brought to you by Ainslie Bullion, Ainslie Crypto, and the Gold and Silver Standard as the Ainslie Group celebrates 50 years. Today, welcome back, Alex, and I've been very keen to talk to her about what's going on with these whys that she's identified in the news, as they've certainly been dominating the headlines. How are you going today, Alex?
I'm going well. How are you?
I'm good. Why? That's the question on all of our minds. I liked how you framed that today. Let's start off with the big one that has certainly caught a lot of attention in terms of the magnitude of those moves, and that's the yen. It was something that probably would have been expected for a long time, but we really saw it take off, and it was quite spectacular to watch. Now, you talk in the article about multiple aspects around that. So if you can maybe start us off by telling us what happened there, but also what the implications are, because you highlight that they may not be able to really solve it easily by raising rates. So can you talk to us a little bit about the yen?
Yeah, so the whole carry trade, everyone keeps talking about the yen carry trade. Every time the yen lifts up, people panic. The Bank of Japan panics, and they're burning through their reserves to try and protect the yen and not depreciate it. So Monday being a public holiday, probably half the investment banks in the world then said, let's go. Went on attack on the yen, and it very rapidly went from around 156 to 160. Everyone's been trying to speculate on when the Bank of Japan will step in and start buying yen and selling US dollars. And apparently that was at 160. So there was a very fast pullback to 155 over about an hour or two. Currency markets went crazy, and no one has come out and said they were the ones doing it. So Bank of Japan has got a no comment on it. And just like what happened in 2022, when Japan spent $60 billion then trying to get the yen back down from 146, same things happened. We're back around 157, 158 now. So they haven't, whoever stepped in has not made much of a difference at this point.
And can they really make much of a difference when, I mean, that this is the blood in the water scenario where you get, the shark circling that will take advantage. It's a dangerous game to be playing if you're trying to stem that flow, isn't it?
What can they do? Their debt's at around 260%. They can't lift interest rates because that would bankrupt the Bank of Japan. They're stuck, and the US keeps coming out with wonderful fairy tale figures. I mean, some of them are probably right. I suspect their CPI, when they're spending trillions of dollars on deficits, is right. I do not believe their employment figures, and we'll come to that in a little bit with their tax receipts. They're probably supporting a less rosy picture than what the US is stating.
So before we get to the US, and there's lots to talk about there, but if we look at Japan, well, really the interplay of the three here, if we talk about the US, Japan, and China, you talk about the interconnectedness going on with the yuan, particularly there. You showed an excellent chart, sort of overlaid the movement that we saw in both. Can you maybe talk about this, what seems to be tug of war, and that's how you referred to it, going on between those currency pairs, so particularly the yen and the yuan. What's going on there, and how do those dynamics unfold in terms of what we start to see globally when you've got those sort of power plays happening?
Well, when you've got an economy that's not doing well, those governments and reserve banks, I guess, want the currency down because it promotes more manufacturing onshore, especially for places like China that are focused on manufacturing. So that helps lift their economy, or feels like it lifts the economy. So when currencies are devaluing like they are at the moment, which is the yen and the yuan, it does create inflation, but it also gives them a competitive advantage. But this rapidly, this quickly, it's not good for anyone. And that overlaid graph, if you see it, what happened on Friday night was China, which pegs its dollar, well, it lost its peg on Friday night, or they've tried to pull it back down. They've got a target rate of around 7.1. They reiterated their target rate yesterday, and it's sitting at around 7.25. So they're trying to get back to their target rate. but the market is not letting them. So on Friday night, the Yuan, they've tried to pull the peg back. Then on Monday, during the bank holiday, the yen's gone up. They've pulled back. And then again, a couple of hours later, China's tried to pull back again. So no one's saying who's doing this, but it is likely the reserves, those reserve banks trying to sell US dollars and support their currency. And, if one country's selling US dollars, it puts pressure through other currencies. So it's probably just putting a whole heap of pressure through the US dollar pairs, and it ends up looking like a bit of a tug of war.
And I mean, the elephant in the room here is the US dollar as well, because you've got these policies that we've seen implemented in Japan that have caused the market to feel that it can push the yen around. Similar situation in China with the yuan. But then when you look at what's going on in the US, and this is the third Y, Yellen, it's quite spectacular. Like it's quite crazy, and it's very hard to get your head around, really, because it dwarfs all of it, really, when you think about it. But you really noted the marked shift in Janet Yellen's stance regarding the US dollar, or not so much the dollar, but the deficit, particularly around the debt. So she's come out with really very different words to what she had not that long ago. Talk to us about Yellen.
She is in charge of selling US treasuries. So that is her job. She has to fund the US government. Back in September last year, 33 trillion. No worries, US has got this. We're okay. One point, and that around that time, probably June to September, is when Powell was really starting to say there is a problem here. US deficit spending is causing this inflation. We've got a problem. But Yellen, no, Treasury's got this. We're all okay. Well, now that China and Japan, who are the Treasury's biggest international foreign buyers, look like they need to sell, Yellen is starting to change her tune to something that resembles more what Powell's been saying. She said last night that the US needs significant steps to reduce the budget deficit. Now, she is an avid supporter of Biden and all the deficits. So for her to be coming out and saying something, I think it's pretty panicked. And if you actually reflect on where that's come from, well, on April 19, I think it was the 19th, anyway, around there, all the taxes came in. They were down around $40 billion supposedly on what they were expecting. So Treasury has now been asked to raise another $41 billion in debt. Just the amount of treasuries that she's being asked are going up, from what I can tell, at about $50 billion a quarter more than what they were expecting. So January to March was about right at $748 billion. April now, after they've receipted their taxes in, they still need $243 billion. So that tax money was spent very quickly. And then July to September, they're now saying $847 billion. So for, in a half a year's space, there's $100 billion more needed between quarters.
Massive, massive numbers. And this is the part I can't really get my head around, because if you've got Janet Yellen coming out and raising concern.
Yellen. Sorry.
Yellen. If she's coming out and raising these concerns, right? Like saying that we're not in a good situation, that is not really what you want to hear if you're the biggest holders of that debt, which we've highlighted are Japan and China. So you've got we're saying the word panicked makes sense to me. Like that seems to be what's going on there. Is it panic why she's coming out with those statements? Because it seems a little bit irresponsible to have that sort of power that she has to sway market sentiments, coming out and saying that right at the time when it's most crucial. I mean, we could argue good on it because it's absolutely honest, but at the same time, it feels very dangerous.
It was in the fine print with what she was saying. I mean, before that, she was talking about how much better off Americans are under Biden and all sorts of other things before that. And this is a fine print panic. So, you know, I think
We'll coin that term, a fine print panic.
yeah. So when just like the yen became the headline, but the yuan was doing crazy things too. There's certain, you know, the yuan was the fine print as well. So there's a whole heap of things going on in the background, which I think resembles more panic and that they've lost the narrative now. But you know, we've always said it, look at the fine print because there's lots of things going on. And yes, if Yellen came out and said that now, I'd be pretty concerned if I was holding treasuries, period, as opposed to the major holders, especially as their currencies appear to be collapsing against the US dollar.
It's all a mess. We keep highlighting that it's a mess, but we certainly appreciate having you here to step us through it each week. So thank you for your work on that as always, Alex.
Oh, thank you for having me again.
Thanks everyone for watching. We'll chat again soon.